Welcome to the Dip Dive. We're here to cut through the noise and give you the clearest insights from the sources we've gathered. Today, we are zeroing in on, well, probably the most talked about sector right now, artificial intelligence. It's absolutely booming. Everyone's paying attention. And a lot of you are naturally wondering, okay, how do I actually navigate the investment side of things in this really transformative space? So our specific deep dive today looks at a company that's popped up on a lot of investors' radars, maybe even yours, BigBear.ai. That's ticker BBAI.
Exactly. And our mission really is to take all this information we've given, articles, research, our notes, and just boil it down. We want to pull out the most important bits to help you figure out if BigBear.ai is, a smart bet right now, or maybe something to be a bit wary of. So what they do at their core is AI data analytics. Essentially, they help organizations make sense of just huge amounts of data, turn it into intelligence they can actually use for, faster, better decisions. And their reach is pretty wide, actually. They do predictive stuff for national security, but also things like forecasting patient numbers in hospitals. So theoretically, yeah, a pretty diverse customer base.
Okay, so that's the picture of what they do. Now, what did we find about how their stock has actually been doing? Because if you've been watching BBAI, you might have seen the share price just skyrocket, something like 200% over the past year.
Yeah, a 200% jump. That's definitely significant for anyone who got in early.
Right. A jump like that really makes you wonder. So what did the sources tell us? What was behind that euphoria? What really happened?
It's a great question. And the sources seem to point to a couple things. First off, BigBear.ai, it's still a pretty small AI startup. And right now, investors seem pretty quick to speculate on AI companies. There's this real chase for the next big thing, bit of FOMO maybe.
Oh.
And if you look at the bigger picture, it's kind of hard to ignore Palantir. They're another AI data analytics player, right? And they've gotten a lot of attention, found a lot of success, especially with government contracts, but also commercial clients. I mean, just look at Q1 this year, Palantir sales up 33%. And they closed, 139 deals worth at least $1 million each? Pretty impressive stuff.
Okay, and BigBear.ai is actually a strategic partner of Palantir, isn't that right?
That's right, yeah.
So is the thinking here that investors see Palantir doing so well and just kind of expect BigBear.ai to, follow in their footsteps? Like a second way to play that same trend.
Precisely. That partnership, combined with Palantir's really strong performance, it creates this story, this narrative for investors that, hey, maybe BigBear.ai could catch that same wave. It's definitely a key part of that speculative optimism we've been seeing.
But, okay, despite those really eye-popping yearly gains, the sources really hammered home the volatility here. This is not a smooth ride. It's actually down, nearly 60% just since mid-February this year.
Yeah, a huge drop.
And kind of remarkably, it's down by about the same amount, 60%, since they went public back in late 2021. So, yes, a big run-up, but wow, a really wild ride, too.
Definitely volatile.
So, given that roller coaster, let's really try and unpack the fundamentals underneath it all. Because, for young companies trying to break into a new, fast-growing market like AI, seeing rapid sales growth isn't just nice to have. It's pretty much critical for them to survive long-term, right?
Absolutely critical. And, that's where the story maybe gets a bit less exciting for BigBear.ai. When you actually dig into their revenue numbers, especially for what's supposed to be a high-growth startup, it's a bit concerning. In the first quarter of this year, their revenue only went up 5%. Just 5%.
Yeah.
That took them to $34.8 million.
Only 5%. Wow.
Yeah. And then you look at their guidance for the whole year, what management is projecting. They're saying revenue between $160 million and $180 million. So if you take the middle of that range, that's an increase of just over 7%.
Okay, hold on. A 5% or 7% growth rate. That might sound all right, maybe for some big established company, right, like a utility or something. But for a young startup in a hot market like AI, why is that specific rate, that single-digit growth, such a, big red flag? What's it really telling us?
That's a really key distinction to make. What's fascinating, or maybe concerning, is that contrast, exactly like you said.
Yeah.
You typically see this kind of low single-digit sales growth from, much more established companies that maybe don't have many new places to expand. But for a young startup like BigBear.ai, one that's supposed to be rapidly growing, grabbing market share in this, brand new, booming AI market, this isn't just slow growth. It's a critical signal. It really suggests they might be struggling to turn all that industry excitement, all that hype, into actual sales, into market penetration. Or maybe their product just isn't getting the traction it needs to really scale up. It definitely raises questions about, their competitive advantage and their ability to actually cash in on this AI boom everyone's talking about.
Right. So beyond the financials, which are, let's say, underwhelming for a growth story, another pretty big area of concern the sources highlighted was leadership. Leadership stability, or maybe the lack of it. It sounds like they've had trouble holding on to their CEOs.
Yeah, that's putting it mildly. It's a very telling sign, especially for a young company. BigBear.ai is now on its third CEO in just 4 years. And remember, they only went public in late 2021.
Third CEO in 4 years. Wow.
Yeah. The current CEO, Kevin McAleenan, he only started in January of this year. And his background, interestingly, before this, he was acting Secretary of Homeland Security under the first Trump administration.
Okay, so that kind of churn at the very top, why is that so bad for a company? Especially a young one just trying to find its footing. What's a bigger picture risk there?
Well, if you connect it to that bigger picture, it's not a good look. It really isn't. Think about it. A startup needs a clear, long-term vision, right? And stable leadership to actually execute it. Cycling through 3 CEOs so quickly after going public, it just screams instability. Lack of consistent direction, it can mess up operations, definitely hurt employee morale, and critically, it signals the instability to potential customers, partners, and of course, investors.
Right, that makes sense.
You need that stability at the top to build trust, attract good people, and just methodically chase your goals for actual sustainable growth. And, well, BigBear.ai really hasn't shown that yet.
Okay, so we've got this picture, a stock that had a huge run-up, driven partly by AI hype and the Palantir connection,
Right.
but super volatile. Then underneath, we see pretty weak revenue growth for a supposed startup in this sector and this revolving door at the CEO position. So pulling all these threads together from the sources, what does it all mean for you, the potential investor? What's the final verdict here?
Yeah, the core conclusion from the source material we looked at is actually pretty straightforward. The expert opinion in the source. They do not recommend buying BigBear.ai stock right now. Simple as that. And the main reasons are exactly what we've been talking about. That weak sales growth, which really suggests they're struggling to capitalize on the whole AI opportunity. And just as importantly, that instability in the C-suite, the top executive leadership. Those are major concerns for anyone thinking long-term. It really looks like a potential trap where investors might be getting maybe a bit too focused on the fact that it's just an AI stock during this really hot time for the industry. And because of that label, they might be overlooking these pretty significant underlying problems the company is facing.
So ignoring the fundamentals because of the sector hype.
Exactly. So instead, the sources basically suggest that investors would probably be much better off looking for an established AI company. One that's already kind of proven it can scale, innovate, keep growing consistently, rather than taking a flyer on BigBear.ai at this particular moment.
Makes sense.
Now look, things could change for the company down the road, obviously. Fortunes can turn. But the sources were clear. They'd need to see some major changes first, like sales really taking off significantly and a solid, stable leadership team in place for a good stretch. We're talking years, not just a few good months, before they'd even think about reconsidering this stock as an investment.
Yeah, it really does highlight that tension we wanted to get into today, doesn't it? That exciting promise of investing in AI versus the often, challenging and kind of messy reality of how individual companies are actually performing, how stable their leadership is. It's clearly not as simple as just picking any stock with AI in its name or description.
Absolutely not. It really drives home a crucial point for you, the listener. So as you keep looking at hot trends, whether it's AI or the next big thing, maybe pause and ask yourself this. When a whole sector is booming like this, what specific signs of financial health, what proof of leadership stability would make you feel truly confident about investing? And conversely, what red flags, like the ones we saw with BigBear.ai today, would make you hit the brakes, even amidst all the hype? It's a really critical question to keep in mind, I think, in any fast-moving market. It could save you from getting swept away.